Feeling like your money isn't keeping up with rising prices? That's inflation, and if you're not careful, it can quietly eat away at your savings. Today, we're breaking down the best investments that can help protect your money and even grow it despite inflation. From stocks to real estate and everything in between, you'll learn which strategies actually work and which ones might fall short. Today, we will talk about best investments to protect your money from inflation. So before we start, make sure to hit the like button and subscribe to my channel. 1. Understanding inflation. Inflation is the rise in the general price level of goods and services over time, which decreases the purchasing power of money. Essentially, what you can buy today for $100 might cost more in the future. Inflation affects savings, investments, and daily living costs. People often underestimate its impact, assuming money saved in cash or low-interest accounts will retain its value. In reality, high inflation erodes wealth if returns do not exceed the inflation rate. For beginners, understanding inflation is crucial because it influences investment decisions and financial planning. Protecting money against inflation ensures that savings and investments maintain their purchasing power over time. Knowledge of inflation allows investors to make informed choices about asset allocation, risk, and growth strategies to safeguard wealth effectively. 2. Stocks as an inflation hedge. Stocks have historically outpaced inflation over the long term. Companies can raise prices for their products and services, allowing revenue and profits to grow alongside inflation. This growth can increase stock prices and dividends, preserving the value of investors' money. Diversified portfolios, including a mix of domestic and international stocks, can further reduce risk while benefiting from economic growth. Beginners should understand that stocks provide both income and potential appreciation, making them a strong choice for long-term protection against inflation. While short-term market fluctuations can be volatile, patient investors who hold quality stocks over time are likely to see returns that exceed inflation, preserving and growing their wealth in real terms. 3. Real estate investments. Real estate is another effective way to protect money from inflation. Property values and rental income generally rise with inflation, allowing investors to maintain purchasing power. Real estate provides tangible assets that generate cash flow through rents and potential appreciation over time. Investing in rental properties, real estate investment trusts, REITs, or commercial real estate can diversify income streams. Inflation often leads to higher replacement costs, increasing property values. For beginners, understanding real estate's role as an inflation hedge highlights the importance of tangible assets. While real estate requires management and initial capital, its ability to grow in value alongside inflation makes it a reliable long-term investment strategy, complementing stocks and other assets. 4. Treasury inflation-protected securities, TIPS. TIPS are government bonds specifically designed to protect investors from inflation. The principal value of TIPS adjusts with the Consumer Price Index, CPI, ensuring that the investment keeps pace with rising prices. Interest payments are calculated based on the adjusted principal, providing income that also grows with inflation. For conservative investors, including beginners, TIPS offer a low-risk way to preserve wealth. While the returns may be modest compared to stocks or real estate, they provide security and predictability. Including TIPS in a diversified portfolio helps balance risk while guaranteeing that investments are not eroded by inflation over time, making them a key tool for long-term financial planning. 5. Commodities and precious metals. Commodities like gold, silver, and oil often retain value or increase during inflationary periods. Gold, in particular, is considered a traditional hedge against inflation because it maintains purchasing power when currency value declines. Investors can gain exposure through physical assets, commodity ETFs, or mutual funds. Commodities tend to perform differently from stocks and bonds, providing portfolio diversification. Beginners should understand that while commodities can be volatile, they can protect wealth during periods of rising prices and economic uncertainty. Combining commodities with other assets ensures a balanced portfolio that addresses both growth and protection from inflation. 6. Diversified ETFs and mutual funds. ETFs and mutual funds that focus on inflation-protected assets or diversified portfolios can be an easy option for beginners. Funds may include a mix of stocks, bonds, real estate, and commodities, allowing investors to spread risk while aiming for inflation-beating returns. Passive index funds, for example, track market indices and grow with economic trends, often keeping pace with or exceeding inflation. Actively managed funds targeting inflation-hedged assets combine professional expertise with diversified exposure. Understanding how diversified funds work helps beginners access inflation protection without selecting individual assets, providing convenience, liquidity, and long-term growth potential in a single investment. 7. Inflation-protected accounts and savings. Certain savings accounts and certificates of deposit, CDS, offer interest rates tied to inflation. While returns may be lower than stocks or real estate, these accounts provide safety and liquidity. They are suitable for conservative investors or those needing short-term access to funds while maintaining purchasing power. For beginners, inflation-protected savings accounts serve as a risk-free tool to preserve wealth while learning about more complex investment options. They complement higher growth investments, ensuring that a portion of capital remains secure against the erosive effects of inflation. 8. Cryptocurrency and alternative assets. Some investors view cryptocurrencies like Bitcoin as potential inflation hedges due to their limited supply and decentralized nature. While highly volatile, digital assets can complement traditional investments in a diversified portfolio. Alternative assets like fine art, collectibles, or commodities can also retain value during inflationary periods. Beginners should approach these options cautiously, understanding the high risk and volatility involved. Cryptocurrencies and alternative assets are speculative tools, but when combined with more stable investments, they offer potential upside and diversification, helping protect wealth from inflation in innovative ways. 9. Long-term planning and diversification. Protecting money from inflation requires a long-term perspective. Diversification across asset classes, stocks, real estate, tips, commodities, and alternative assets reduces risk and ensures that different investments respond to inflation differently. Rebalancing portfolios periodically maintains the right allocation to match financial goals and market conditions. Beginners should focus on a mix of growth-oriented and inflation-protected assets, ensuring that their wealth grows in real terms over time. Strategic planning, patience, and disciplined investing are essential for maintaining purchasing power and achieving long-term financial security, even during periods of rising prices. 10. Practical steps for beginners. Beginners can start by assessing their risk tolerance, investment horizon, and financial goals. Allocate funds across multiple inflation-protected assets such as TIPS, diversified ETFs, real estate, and select stocks. Keep some liquidity for emergencies, and regularly review portfolio performance against inflation trends. Avoid chasing high-risk, high-return investments without understanding potential losses. Educate yourself about economic indicators, interest rates, and inflation trends. Starting small and gradually expanding investments while maintaining diversification ensures steady wealth growth. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.